Hello. Uh, Very good morning, guys. Okay. First, we can revise all the things which we have discussed in the previous classes. Then, after, I will discuss the new topics. Sir. So, we have started with the terminologies. So, before starting of terminologies, we have seen one of the principle called as separate entity concept. So, in our India, we are going to follow the gap. What is the meaning of gap, Amma? Generally accepted accounting principles. Okay, na? All the rules and regulations will be there in the gap. Okay, na? From there, we are following some of the rules and regulations related to accounting. Okay, now what is the separate entity concept is saying? As per separate entity concept, owner is a different person, business is a different person. We need to think from point of view of business. We should not think from point of view of owner. We means in the class business itself. Here, first of all, in order to start a business, owner need to invest cash, need to make the investment in the form of cash or goods or in the form of other assets. Okay, now here owner given the money to us means we need to repay na, we no need to repay na, we need to repay. The investment made by the owner into the business is called as capital. We all know, yes or no ma? So that capital is asset or liability for us. Liability. Why? Because we need to we are having an obligation to repay in future. For that reason, capital is called as liability. Next one, what is the meaning of business? A place where goods are exchanged and services are rendered. What is the meaning of good? Good means an object or commodity with an objective of resale. Okay, now either we can purchase and sell or either we can manufacture and sell. But we should not do what ma? We should not do the use and resale. Okay, now we should not use and resale. But what we can do ma? Either directly we can purchase and we can resell, or directly we can manufacture and we can resell. Next one, what is the meaning of drawings? Anything taken over by the proprietor from the business for the personal use. Okay, anything means what ma? He can take over the cash, okay na, or kind, okay na, goods or any other assets he can take now for personal use or business user. For personal use, it is called as drawings. Drawings means who need to pay to us? Owner need to pay to us. So asset or liability? Asset. Drawings is an asset and the capital is a liability. You know what is the meaning of expenses and what is the meaning of incomes. Okay na, any amount outflow means for the purpose of business, it is called as what ma? Expenses. Okay na, expenses, we are having two types of expenses. We can discuss all the things. Okay na. Next, what is the accounting treatment for the drawings? We need to reduce from the capital. Yes or no ma? So then after we have seen all the discussion related to capital, first we will start with the opening capital. Then after what we will do ma? Drawings who need to pay ma? Owner need to pay to us. So for that reason we need to reduce. Then after what ma? Interest on capital, it is an expenses to us, so we need to add. Next, reduce the interest on drawings, it is an income to us, we need to less. And additional capital we need to add, and then we will get what ma? Closing capital. For that closing capital, what we will do? Net profit means we are going to add, net loss means we are going to reduce. Are you getting the point or not? Once again, opening capital means what ma? Initial capital brought by the owner into the business. So then after drawings means what we need to do ma? Imagine owner invested 10 lakhs. Owner invested how much? 10 lakhs. Okay na, owner taken away the 1 lakh worth rupees of goods. Okay na, then net amount, how much amount we need to pay? 10 lakhs minus 1 lakh. How much amount we need to pay? 9 lakhs. So we need to reduce from the capital, we need to add back to the capital, we need to reduce from the capital. Next, then after interest on capital, okay now who need to pay ma? We need to pay to the owner. For that reason we are adding we are reducing we are adding. And next one, interest on drawings, who need to pay? Owner need to pay to us. That means we need to reduce we need to increase we need to reduce. Then after additional capital we need to pay. So that for that reason what we need to do ma? Add. then we'll get what ma? Closing capital. For that closing capital, what we need to do? Add back net profit or reduce net loss. So both the simultaneously will be there. No, okay na. If net profit is there means there will not be having net loss. If net loss is there means they will not be having net profit. Okay now, from both the points, from both the things, any one will be presented. Okay now, profit means profit, loss means loss. That's all. Then after we have discussed, we have started the discussion of modern approach. How many approaches we are having, sir? Means totally 3 approaches. Totally how many approaches ma? 3. First one is called as traditional approach. Second one is called as modern approach. Third one is called as accounting equation approach. First one is called as what ma? Traditional approach. Traditional approach means we are having the golden rules. What are the golden rules we are having? Personal account, real account and nominal account. Next one. Next modern approach means what ma? We have discussed these things. Next one, accounting equation. Accounting equation we can discuss in further classes. Okay, now you know equation. What is the equations are? Asset equal to equity plus liabilities. Okay, now this is called as accounting equation. We can discuss in further classes, no problem. As of now, you know all the things related to traditional approach, and now we are discussing about the modern approach. Already we have discussed, we have not discussed. Already we have discussed. In this modern approach, what we have done ma? We have taken one account having a which shape ma? T shape. Okay na. Left hand side is called as debit record, right hand side is called as credit record. So take the shortcut of dealer. Okay na. What is the dealer spelling? DEALER. Okay na. DEA we have taken on the left hand side. LER we have taken on the right hand side. Nothing but debit side and credit side. D for drawings, E for expenses, A for assets. Then after L for liabilities, E for equity or capital, R for revenue or incomes. These 3 are presented on which side? Debit side. For that reason, we have considered it as which balance amma? Debit balance. Okay now. These drawings, expenses and assets will have which balance? Debit balance, because they are presented on which side? Debit side. When come to the liabilities, equity or capital and revenue or income, they are presented on which side? Credit side. For that reason, what this showing which balance amma? Credit balance. Are you getting the point? Okay now. These 3 are presented on the debit side, so that it is called as debit balance. These 3 are presented on which side? Credit side, so that this 3 is having which balance? Credit balance. What is the meaning of debit balance? In a particular account, debit side is more than credit side. Here if you see, debit side is having how much? 10,000 and credit side is having how much? 8,000. Which side is more? Debit side is more. Okay now. In a particular account, debit side is more than credit side means it is showing which balance? Debit balance. Okay now. So what is the meaning of debit balance amma? In any account, debit side is more than credit side, then it is called as debit balance. Next, what is the meaning of credit balance? If you see this account, debit side is having 8,000 and credit side is having 10,000. Credit side is more than debit side means it is called as credit balance. Okay na guys. Next, what we need to do ma? If the debit balance increases, we need to do debit. If the debit balance decreases, we need to do credit. In the same way, if the credit balance increases, what we need to do amma? Credit. If the credit balance decreases, we need to do debit. Are you getting the point? Simple. We are having totally how many categories? Even though if we are having the 6 categories, so we can consider it as how many categories ma? 4. Why sir? Because drawings is asset and the capital is liability. So for that reason, how many categories we are having? Only 4 categories. Expenses and assets will have which balance? Debit balance. And next, liabilities and income will have which balance? Credit balance. What is the meaning of debit balance? Debit side is more than credit side. What is the meaning of credit balance? Credit side is more than debit side. If the debit balance increases, what we need to do? Debit. If the debit balance decreases, what we need to do? Credit. Debit increase means debit. Credit increase means credit. Decreases means opposite. Decreases means what ma? Opposite. Okay now. Then after we have discussed the balances. Okay now. If while doing the balance, on the total column, how much amount we need to record ma? 10,000 and 10,000. We have got the balancing figure on 2000 on the which side? Credit side. Okay, now credit side while writing anything we need to put the word called as buy. On debit side while writing anything we need to put the word called as to. So this is the closing balance. So for that reason what we will write ma C by D or B by D? C by D. So buy balance C by D. Then debit side what we will get ma? To balance brought down. This is the beginning, so that brought down. This is the closing. This is for that reason we are doing what ma? Carry down. Closing means carry down, beginning means brought down. If you observe this one, for the debit balance, opening balance will be on which side? Debit side. For the debit balance, opening balance will be on which side? Debit side. For the debit balance, closing balance will be on the which side? Credit side. Okay, no? Don't be confused. The debit balance increases, what we need to do? Debit. If the debit balance decreases, what we need to do? Credit. In the same way, if the credit balance increases, what we need to do? Credit. And the credit balance decreases, what we need to do? Debit. Here, this is another rule. This rule will be helpful in the while doing the ledgers. This rule will be applicable while doing the journal. Okay, na? While passing the journal entries, we will follow this approach. This rule. Okay, na? While writing the opening and closing balances, we will follow which one? This one. Okay, na? This rule will be applicable in the case of ledger preparation. This rule will be applicable in the case of journal. Are you getting the point, Amma? Okay, na? Just we are taking that all. Okay, na? If you understand, okay. If you're not getting any point also, okay, it will be repeating. Daily I will repeating 1, 2, 3 times. Okay, na? It will be get for you. Once again. For the debit balance, opening balance will be on which side? Debit side. For the debit balance, closing balance will be on which side? Credit side. Next, if you observe this credit balance means what? Credit side is more than debit side. If you see while doing the balancing, debit side 10,000 and credit side also 10,000. What is the balancing figure ma? 2,000. This is called as what? To balance carry down. This is called as what ma? Buy balance brought down. If you see this one, for the credit balance, for which balance amma? For the credit balance, opening balance will be on which side? Credit side. For the credit balance, closing balance will be on which side? Debit side. Okay, now for the debit balance, opening balance will be on the debit side. For the credit balance, opening balance will be on the credit side. Opening same. Okay, now closing opposite. Increase same. Decrease opposite. Okay, now once again, assets and expenses is showing which balance amma? Assets and expenses is showing the debit balance. Incomes and revenues, nothing but incomes and liabilities is showing which balance amma? Credit balance. If the debit balance increases, we will do debit. If the debit balance decreases, we will do credit. If the credit balance increases, we will do credit. If the credit balance decreases, we will do debit. Okay, na? You need to remember only one thing. What is the thing one? Expenses and assets will show which balance? Debit balance. Opposite what ma? Liabilities and incomes will show which balance? Credit balance. Remember, only 4 categories or only 5 categories are? Only 4. Expenses and assets will have which balance? Debit balance. Incomes and liabilities will have which balance? Credit balance. If the debit balance increases, debit. If the credit balance increases, credit. If the credit balance decreases, debit. If the debit balance decreases, credit. Okay, now next. For the debit balance, opening balance will be on debit side. For the debit balance, closing balance will be on credit side. So that thing we have discussed in yesterday's class. Yes or no ma? Opening and closing balances. For the opening balance, what we need to write ma? Balance brought down. For the closing balance, what we need to write? Carry down. Opening means nothing but beginning. Beginning means brought down. Closing means carry down. Okay na? For the debit balance, opening balance will be on debit side. What we need to write? To balance brought down. To balance brought down. For the debit balance, closing balance will be on credit side. While writing credit, what we need to write ma? Buy. Buy balance carry down. Closing means carry down. Opening means brought down. Closing means carry down. Opening means brought down. Okay now once again. For the debit balance, opening balance will be on debit side. So while writing debit, what we need to put? To or buy? To. To balance brought down. To balance brought down. While writing the closing balance, okay now for the debit balance, closing balance will be on which side? Credit side. While writing credit, what we need to put? To or buy? Buy. Closing means C by D or B by D? C by D. So buy balance carry down. Are you getting the point? Next one. For the credit balance, for which balance, Amma? Credit balance. Opening balance will be on the credit side. Opening balance will be on the credit side. So while writing credit, by balance brought down. For the credit balance, closing balance will be on the debit side. So while writing debit, what we need to put? 2. 2 balance carried on. Okay, na guys, this is the rules. What are the rules? Which approach? Modern approach. In the modern approach, we are bifurcated as first 6 categories, and then we are coming to the 4 categories. What are the 4 categories? Expenses and assets will have the debit balance. Incomes and liabilities will have the credit balance. What is the meaning of debit balance? Debit side is more than the credit side. What is the meaning of credit balance? Credit side is more than the debit side. Okay, then after, if the debit balance increases, what we need to do? Debit. If the debit balance decreases, what we need to do? Credit. If the credit balance increases, credit. Credit balance decreases, debit. Then after, opening and closing balances. For the debit balance, opening balance will be on the debit side. What we need to write? To balance brought down. Okay, now for the debit balance, closing balance will be on the credit side. What we need to write? By balance carried on. By balance carried on. Closing means carried on, opening means brought down. Okay, once again, for the debit balance, opening balance will be on the debit side. What we need to write? To balance brought down. For the debit balance, closing balance will be on the credit side. What we need to write? By balance carried on. Next, then after, for the credit balance, opening balance will be on the credit side. What we need to write? By balance brought down. Credit side kada. So by. Okay, na debit side means 2. Okay, once again, for the credit balance, opening balance will be on the credit side. While writing the credit, by balance brought down. Brought down. Opening balance brought down. Okay, now next, for the credit balance, closing balance will be on the debit side. While writing the debit, to balance carried on. To balance carried on. Okay, na? Or again, once again. Okay, na? Next to financial books, and we have discussed one entry. Okay, na? So here, what is the entry ma here? Mr. Ram, owner of the business, started with the 10,000, 10 lakhs. Okay, na? With the amount of 10 lakhs, he has started the business. We know the outcomes. Already we know the outcome. What are the outcomes here? Cash and capital. Cash and capital. You know the outcomes, so you don't know Namma. You know na already. But before that, we will use the which account. Cash means asset. We will follow the real account. Debit what comes in. Credit what goes out. But now we are following which approach? Modern approach. So cash means asset or liability amma. Asset. So asset which balance? Debit. Asset and expenses will have debit balance. Incomes and liabilities will have credit balance. Here cash comes into the business or goes out? Comes in. Comes in means cash balance increases or decreases? Increases. For that reason, what we need to do? Debit. Next, then after, capital means asset or liability or income or expenses? Liability. Liability which balance? Credit balance. So credit balance. Liability created, liability repaying. Liability created. Just now owner brought into the business, so liability was created. We are not going to repay. So while repaying the liability, liability will be decreases. While repaying the liability, liability will be decreased. For example, we have taken a loan from the bank for rupees 10 lakhs. Liability created, we are repaying created. That means our liability increases or decreases? Increases. While taking the loan, liability will be increases. While repaying the loan, liability will be decreases. Here we have taken, we are repaying. Taken means created. Taken means what ma? Created. So liability created means increases or decreases? Increases. So credit balance increases means what we need to do? Credit. Credit balance increases means credit. Debit balance increases means, okay, did you get the point? What is your name? Teja. Okay, now this point. Liability while taking any loan or while taking any capital from the owner, liability value will be increases. Imagine, okay, I will discuss the creditor point and debtor point clearly, you can understand. Okay, na? At that point of time, you will get when the asset will be increases, when the liability will be decreases, we will get the clear picture. Okay, na? Until then, wait. So here point, okay, na? Here the liability increases or decreases? Increases. Imagine we are taking a loan, liability created and liability increases. So now only business started. Previously is there. We have started now. Okay, now previously any liabilities we are having? No. Liability value is how much? 0. previous this transaction liability value is how much? 0. Now liability created, how much? 10 lakhs. 0 to 10 lakhs means liability increases or decreases? Increases. So what is the entry we need to write, ma? Cash account debited to capital account. Cash account debited to capital account, being amount invested by the owner. Okay na? So debit side 10 lakhs and credit side 10 lakhs. What is the format? Date, particulars, LF, debit amount, credit amount are the columns for the journal, you know already. Okay na guys? Then after we have discussed what, ma? Certain MCQs we have discussed, right? Okay, I will see this. So you know the meaning of business. What is the meaning of business, amma? A place where exchange of goods and rendering of services is called a business. Proprietor means a person who initiate to start the business. Okay now, if we start any business means we are the proprietors. Next, capital means resources either by way of cash or kind brings by the proprietor to start or run the business. He can bring in the form of cash, he can bring in the form of goods or any other asset. Okay now, bringing any good or asset or goods into the business by the proprietor to start or run the business is called as a capital. Next one, drawings. What is the meaning of drawings? Taken away by the proprietor for the personal use is called as a drawings. Capital means liability, drawings means asset. Then after, what is the meaning of asset? And resources utilized by the entity for generation of revenue. For generation of revenue, we are using one particular thing for the purpose of generation of revenue. It is called as what, ma? Asset. We can use for the purpose of production, for the purpose of administration purpose, for the purpose of rental purpose, for the purpose of rendering of a services. You can get a clear definition in AS 10. What is the meaning of ASR? Accounting standard. In the AS 10, the clear picture, the clear meaning, once again we are going to discuss at the time of discussion of accounting standards. Once again I will revise, no problem. Okay now, until then you need to understand the meaning of the asset. What is the meaning of asset? Utilizing any resources for the purpose of generation of revenue, it is called as asset. Okay now, we are using the camera for the purpose of what, ma? For recording the classes and selling the classes. Okay, we are generating the revenue, not generating the revenue. We are generating the revenue with the help of camera recording setup. Okay now, so these are all called as what, ma? Asset or liability? Assets. Assets are how many types? Assets are how many types, ma? Broadly classified assets into the two types. First one is called as, so non-current asset. Non-current asset is also called as fixed asset. Non-current asset is also called as fixed asset. Benefit more than 1 year means it is called as fixed asset. Benefit less than 1 year means it is called as current asset. Okay now, so which are those intention to use more than 1 year? It is called as what, ma? Non-current asset. Non-current asset again classified into how many types? 3 types. Tangible, intangible, vesting assets. Tangible means what, ma? Which we can see and touch. Intangible means which we cannot see and touch. Okay, next, vesting assets means what? Created by environment. Created by environment or natural resources. It is called as what, ma? Vesting asset. For example, you have taken the camera. Camera benefit more than 1 year, less than 1 year? More than 1 year. We are having intention to use more than 1 year. Okay now, so camera is called as current asset or non-current asset? Non-current asset. Tangible or intangible? Tangible. Okay now, goodwill, it is intangible. Patent, it is intangible. Copyright, these are intangibles. Next one, current assets means intention to use less than 1 year or more than 1 year? Less than 1 year. There is another definition called what, ma? Within a less time we can convertible into cash. Okay, less time means how many months? 1 year. Within 3 months we are going to convert means it is called as liquid assets. More than 3 months, less than 1 year means non-liquid assets. Okay now, easy. You can get clearer discussion in further classes, no problem. So just how many types of assets? 2 types. Current assets and non-current asset. Non-current asset is also called as fixed asset. Intention to use more than 1 year. Fixed asset is again classified into 3 types. Okay, now tangible, intangible, vesting assets. Tangible means which we can see and touch. Intangible means which we cannot see and touch. Vesting means created by the natural resources. Example, oil wells, bore wells, coal mines, KGF. KGF. In the KGF, we are having what ma? Coal mine, gold mines. Next one. Current assets means intention to use less than 1 year or within less time, we are going to convertible into the cash. Again, current asset is classified into how many types? Three types: liquid assets, non-liquid assets, and fictitious assets. Okay, now fictitious assets we can discuss in further classes. So liquid assets means what less than 3 months convertible into cash. Non-liquid asset means what more than 3 months but less than 1 year. More than 3 months but less than 1 year. It is called as non-liquid asset. Example for the non-liquid asset is what? Closing stock. Example for the liquid asset is called as cash and bank balances. Cash and bank balances. Is there any doubts up to here? Okay, now up to here we have discussed in the previous class. Yes or no ma? Next, we are going to discuss the liabilities. In this class we are going to discuss what liability. What is the meaning of liability? You know already. Liability means an obligation to be paid in future. Okay, na capital is an obligation to repay. No need to obligation. Yeah, is a obligation to repay. So that it is called as liability or asset. Liability. Okay, liabilities are how many types? Two types. Okay, now broadly two types. Internal liability, external liability. Internal liability and external liability. What is the meaning of internal liability, sir? Capital. What is the meaning of internal liability? Capital. Why they have bifurcated, sir? Because capital will be repaid at the time of winding up. Winding means what closing. Okay, now capital will be repaid only at the time of winding up. If you repay the capital middle of the business, means we cannot do the business. Without the capital, without the investment, we can do the business, or we cannot do the business, sir. We cannot do the business. Here we are having any time period. There is no time period. Only at the time of closure of the business we will repay. For that reason, it is an internal liability. It is an internal liability. No time limit. Having time limit. No time limit. Okay, na. Again, the external liability means what other than capital. External liability means what? Other than capital. These external liabilities are classified into two types. Are you getting the point? How many types? Two types. First one is called as long-term liability and short-term. Long-term means what? Within short-term means what within 1 year we need to repay. Short-term means within 1 year we need to repay. Long-term means what after 1 year we need to repay. Are you getting the point or not? So this time period we need to check from at the time of preparation of financial statements or final accounts. The time of preparation of final accounts, we need to check this time period. Are you getting the point? So easily, liabilities are classified into how many types? Two types: internal liabilities, external liability. Internal means capital. Why we have bifurcated as internal liability? Because there is no time period. Here we are having the time periods. Within 1 year means short term. More than 1 year means long term. Okay, you can say, sir, this is also more than 1 year. But this is also more than 1 year. But having time period or not having time period? Not having time period for the capital. Not having time period for the capital. It is an infinity. It is an infinity. Okay, now only at the time of winding up only we are going to repay the capital. For that reason, they have separated the capital as an internal liability. Remaining other creditors, bills payable, okay, now another outstanding liabilities. These are all called as what external liabilities. External liabilities are classified into two types: long term, short term. Long term means more than 1 year we need to repay. Within 1 year we need to repay means short term liabilities. Are you getting the point? These are the types of liabilities. Sir, imagine how many types of years are there we are having? Two types of years: calendar year and financial year. Now we are going to discuss about the financial year. Sir, year means how many months? Amma, year means how many months? Amma? 12 months. In a year means we are having the 12 months. Here in the financial year will be started in financial year will be start from April 1st. Will be start from April 1st. Will be end on 31st March. Why, sir? From April, count the 12 months. April, May, June, July, August, September, October, November, December, January, February, March. Okay, na? 12 months. We have got or not? Got. But here the years are different. January means December completed means again while entering into the January, year will be changed, same year. Year will be changed. So if you start 2024, if you start with the 2024, it will be end with the 2025. Okay, na? This is how we are going to concluding it as what, ma? Financial year. Financial year means they can represent in the form of 24, 25 or 25, 26 or 20, 26, 27 like that. Calendar year means only 25, only 26, only 27. Calendar year will be start from 1st January. It will be end on 31st December. Okay, na? So same year, different years, same years, but the financial year is different year. So on this date, we need to prepare what, ma? At the end of every year, we need to prepare the financial statements. We need to prepare the financial statement. As of now, I am putting it as what, ma? Final accounts. On this date, we need to check. Okay, na? Here on this date, we are having one loan. We are having one loan. On this loan, we need to repay after 12 months. From which date onwards? From the date of 31st March. The due date here is 1 year after, na? That means we can take what, ma? September 2026. September 2026 means here, from here to here, we are having the time period more than 1 year, less than 1 year, more than 1 year. That means it is called as long term or short term. Long term liability. Are you getting the point or not? From here, within 1 year we need to repay means it is called as short term liability. Okay, na? But capital is called as internal liability. Capital is called as what, ma? That one is a separate thing. Okay, na? For that reason, we are having the what is the equation? What is the accounting equation? Asset equal to liabilities. Asset equal to equity plus liabilities. Asset equal to equity plus liabilities. Are you getting the point? For that reason, the equation was framed like asset equal to equity plus liabilities. They are not going to call it as what, ma? Asset equal to liabilities. Okay, now because capital equity is called as internal liability, other liabilities are called as external liability. External liability, they are concluding it as what, ma? Liabilities. Capital is equal to equity. Capital is equal to equity. Are you getting the point? This is how we have completed what, ma? Types of liabilities. How many types of liabilities? Two types. Internal liability, external liability. Internal liability means capital, because we are going to repay only at the time of winding up. We are not having any time period. It is an infinite. It is a infinite. Next one, external liability means other than internal liability. External liability means what, ma? Other than, and that means what? Loan amount, other outstanding, creditors, bills payable, trade payables, etc. Okay, next one, long term liability and short term. External liabilities are classified into two types. Long term means within more than 1 year we need to repay. Short term means what, ma? Within 1 year we need to repay. Next we are going to discuss about the revenue. Revenue means what? Revenue means inflow na outflow na? Inflow. Gross inflow of cash or receivables from sale of goods or rendering of services is called as a revenue. Okay, now we are selling the goods and we are taking the money. The money is called as, here the money is called as what, ma? Revenue. Nothing but income. Nothing but gross inflow of cash or receivables by sale of goods or rendering of services. Next, what are the examples? Sales, interest received, rent received, etc. What is the meaning of expenditure? Amount spent for running the business organization. Amount spent for running the business organization is called as expenses. For up to here, we have discussed the terminologies of, the business, the capital, the drawings, proprietor, assets and liabilities. Next, revenue and expenses. Okay, now these two are going to helpful to find out the profit or loss. Okay, now what are the two things will be helpful to find out the profit or loss? Revenue and expenses are helpful to find out the profit or loss. Then assets and liabilities are useful to find out financial position. Used to find out what ma financial position. So that's why we are going to prepare the two statements. What are the two statements? Trading and P&L account and balance sheet in the final accounts. The final account. Trading and P&L account, we can find out the profit or loss. In order to find out the profit or loss, which are the required? What are the requirements? Incomes and expenses. To find out the financial position, uh, assets and liabilities. We are having the two types of positions we can discuss. Okay, now. So up to here, is there any doubts? So we have started the discussion with which approach? Modern approach. In the modern approach, how many categories we are having? Initially 6, and then we are concluding it as 4. In that, expenses and assets will have which balance? Debit balance. Okay, now liabilities and incomes will have which balance? Credit balance. What is the meaning of debit balance? Debit side is more than credit side. What is the meaning of credit balance? Credit side is more than debit side. Then after, debit balance increases means debit. So debit balance decreases means credit. Credit balance increases, credit. Credit balance decreases, debit. Then after, further debit balance, opening balance will be on the debit side. What we need to write? To balance brought down. Further debit balance, closing balance will be on the credit side. What we need to write? By balance carried on. Further credit balance, opening balance will be on the credit side. What we need to write? By balance brought down, to balance carried on. Okay now guys, these are the basic rules. Okay now, opening balance, closing balance will be helpful at the time of ledger. Okay now, increase and decrease will be helpful at the time of journal. Okay now we are going, is there further discussion? I can discuss in further class. uh, we are going to discuss some of the journal entries, then we can understand the modern approach in some more way. Okay na? Okay, shall I start? In yesterday we have completed one journal entry. What is the journal entry ma? Owner investment. Okay now, next, second one. So please put the second one. I think you have taken the notes up to here. Yes or no ma? Completed journal entry record చేయలేదా? Then record. The newcomers, please leave the space. Okay na? Leave the 2 to 3 pages. And then start. Okay na? Keep the journal entries. Read, huh? Okay, Nama. So second one. What is the second one means? Goods purchased for rupees 10 lakhs. Goods purchased for rupees 10 lakhs. The same transaction they can ask in the form of what ma? Goods purchased from Mr. Raju. Goods purchased from Mr. Raju for cash of rupees 10 lakhs. Or they can ask goods purchased for cash of rupees 10 lakhs. In how many ways they can ask the same transaction ma? In three ways. Goods purchased for rupees 10 lakhs, or goods purchased from Mr. Raju for cash of rupees 10 lakhs, or what ma? Goods purchased for cash of rupees 10 lakhs. Okay na? If they can ask the question in three ways, but same answer, different answer, same answer. What is the outcome ma here? Purchases and cash, not the goods. We need to take the outcome as purchases. Purchases and cash. Here the person name is mentioned, but even though we are taking it as cash, for what is the reason ma here? They have mentioned what ma again for cash. Okay now after the person name. So that means this is a cash transaction, a credit transaction. Cash transaction. What are the outcomes? Purchase and cash. Here the purchase means income or expenses, asset or liability. Expenses. So purchase is an expenses. So previous which balance amma? Debit balance. Purchase means expenses. We are having which balance? Debit balance. Sir, previously we are having any purchase. Previously we are not having any purchase. Previously what is the purchase value? 0. Now what is the purchase value? 10 lakhs. That means expenses increases or decreases? Increases. Okay now maximum 90% expenses and incomes will increases. 90% cases what will be happen ma? Expenses and incomes will be increases, not all the times. Maximum how much percentage? 90% or 99.99% expenses and incomes will always increases. In some of the situations incomes and expenses will be decreases. I will discuss those concepts also. Okay guys. So previously we are not having any purchase. Now only we are having what ma? Purchase. That means previously value of purchase is how much? 0. Now value of purchase is how much? 10 lakhs. So that means increases or decreases? Increases. So which balance is increasing? Debit balance increases means what we need to do? We need to do debit. Did you get the point? Okay guys. Or if you follow the traditional approach means purchase, expenses, nominal account, debit all expenses and losses, credit all incomes, and at that point of time also purchase is an expenses, debit. Okay na? Next one, cash is an asset. Will have which balance? Debit balance. Increases or decreases? Why it is decreases? Going out or comes in? Going out. Going out means cash balance will be decreases. So decreases means what we need to write? So debit balance decreases means credit. So what is the journal entry we need to record ma? Purchase account debited to cash account. Okay na guys? Okay, write this thing. Okay, guys. Okay, what is the format, Amma? Date, particulars, LF, debit amount and credit amount. So, which thing was debited? So, purchase is debited. So, purchases account debited to cash account. How much, Amma? 10 lakhs on the debit side, 10 lakhs on the credit side. So, narration being goods purchased for cash. So this is how we need to write the journal entries. Did you get the point? Okay, na guys. Further discussion we can discuss in the next class. Okay, na guys. Previous class we have discussed one entry. Now we have discussed only one entry. That means only one journal entry we have learned. We have discussed about the types of liabilities, what is the meaning of incomes and what is the meaning of expenses also we have discussed. Okay, na? Slowly we can go, no problem. Okay, first of all you need to learn about the which approach, modern approach. That is only my target. Okay, na? Okay, bye. Is there any doubts? Thank you. Have a nice day. Bye bye.